Well, guys, the pendulum always swings. The housing market is shifting as sellers now outnumber buyers. Here's what it means for home prices and your opportunity to buy your first rental property. Right now, this is the Market Watch article. Home sellers face an absolutely brutal market that's tilting in buyers' favor as there are 500,000 more home sellers across the U.S. than buyers, according to Redfin. Now, it has been heavily in the favor of sellers lately. I personally bought quite a few homes in the last 6 months, and the homes I bought were drastically discounted from their original asking price. Now, I thought it was because they were higher-end vacation rentals, so therefore they'd be the ones least likely to sell and the most likely to have people go. So it's kind of a precursor to what's going on now. I am still surprised by this because low interest rates are still something of the past, and everyone who bought or refinanced during that low interest rate time, you're only moving if you have to move. They saw prices skyrocket, so maybe some people have said, you know what? Maybe I'll put my stuff on the market. Is that what's leading to this? Maybe it's a lot of people just sitting there saying, you know what? I want to try it out, see what's going on. But let's see more of what Redfin says. One example here is from South Florida. Guys, whenever I see examples from really hot housing markets, I laugh because these are also the places where the inventory skyrockets during good times because there's a lot of speculation, a lot of people building, hoping for that demand to come through. Guys, at the end of the day, it's not just about demand, it's about supply. That's what I always tell people. Don't just focus on what people are buying and what they want to buy. Focus on how much they're being given to buy. The more you're given to buy, the lower prices will go. If a city is growing 500 people a day, like Dallas Metroplex, well, if you build 1,000 homes a day, you're going to have a problem at some point. Will it be today? I don't know. Will it be tomorrow? I have no idea. But supply cannot outpace demand for too long. Guys, look at CNN's article. Home sellers now outnumber buyers by the largest margin in 12 years. That sounds catastrophic. Guys, where were prices 12 years ago? We would all kill for those prices today. Interest rates were lower than they were 12 years ago, but they weren't the 0% rates and the 3% home mortgages we saw 5 years ago. So let's remember this, that it can be a short-term thing. Let's look at this chart right here. Here it is going back to 2013. And according to this, CNN might be a little wrong here because sellers outpaced buyers back in 2019 and 22 when COVID hit. People were doing this, but things even out. Where did home prices go in this time? They skyrocketed, right? They still went up a ton because inflation causes home prices to go up. That's the real driver. This is short term. The market will weed itself out. Sellers will either take haircuts, it'll decrease the supply, or they'll take your houses off market, it'll decrease supply. But at the end of the day, people are still moving. People are still entering the job market every single month. We have to build X number of units a year just to keep up with the number of people growing in our population. So these are the things that really drive long-term pricing. You have to remember that. This right here, I mean, yes, could it matter? Right. Guess what? If you're an investor right now, take advantage of this. Go out there. Go start buying, looking at houses. Go make offers. Go find houses and sort. If you want to make an investment, sort by the ones that have been on the market longest. My wife, she's not a numbers person, but whenever we're looking at a house, she always says, how long has it been on the market? She knows to ask that questions because at the end of the day, if something's sitting on the market for a long time or have had a lot of price cuts, you can get a lot of information about the seller in that regard. Remember, interest rates skyrocketed, and a lot of people thought, oh my God, the housing market's going to crash. It didn't. In fact, we made a video where we talked about, hey, inflation's up there. If people aren't selling, it can keep house pricing high. Why? Supply and demand, not just demand. What am I worried about? Well, guys, I own a lot of property. And guess how I'm worried? Zero. I'm absolutely not worried. Why? These are short-term things. I'm a long-term investor. What I care more about is where's inflation? Is it going to help drive incomes higher? And is it going to be consistent or is it going to be like this? I like consistent inflation. It helps you as an investor because the more property available for sale, the better deal you can get. But remember, you still need to be able to analyze the deal properly. If you're able to analyze the deal properly, don't just think that you got a good deal because the person was asking X and you paid X minus 30%. It's funny, I just bought a house in Arizona this past month and I paid 35% less than the original asking price. But I don't know if I got a good deal yet or not. Why? Because they were asking a ridiculous price. Good for them. They can ask $100 million for the house. And if I pay $2 million for it, whatever price I paid, that's what matters. Doesn't matter that they were unreasonable. What matters is what is it worth? What are my cash flows going to justify as I rent it out? That's what we're trying to teach on this channel. If you believe a good deal is based on the discount to the original ask price, I got a lot of property for you to buy. Please email me. I will give you my list of all the homes I own in Cleveland, and I was asking $100 million for them, but for you, I'll give you a great deal, $1 million, 99% discount. And guess what? I will laugh my way to the bank, and you will go broke. Do you see my point there? Now, real estate's one of the best investments you can make. It allows you to sit there, own an asset that you can touch, you can feel, you can rent out, you don't get as emotional about it. You can sit there long-term and pay down debt, watch the property grow in value, and also generate cash flow. So I really encourage you. I want you to download this PDF. It'll help you buy one great property per year. Now you might sit there and say, one property per year, Paul, big deal. No, guys, it's a huge deal. If you're able to buy one great property per year, investing 25 grand, it could lead to an 8-figure, a $10 million net worth in 30 years and quite the portfolio of cash flowing properties. If you're opposed to that, then please stop watching our channel. But if it makes sense to you, click the link below. We're going to email you this free PDF. It'll explain everything you need to understand about that and that process, how you go about it. This is not rocket science. It is not too good to be true. I'm not telling you some Carlton Sheets get rich quick scheme. It will take you a while, but guess what? It'll be absolutely worth it because when you wake up 20 or 30 years from now with that immense wealth and immense cash flow, you'll be so happy you did it. The people I know in my life who invested in real estate early and young and bought, not a single one of them said to me, I really regret that. The ones who are trying to make a quick buck, who didn't work out very well, they're the ones who regret it. So click the link below and we will email you the PDF immediately. Guys, let me remind everybody, in 1975, interest rates for a home were 9%. In 1985, they were 13.5%. That's an increase of 50%. Guess what? Home prices went from $32,000 to $83,000 or so. We don't know what's going to happen. All we care about is when you buy an asset, are you paying a good price? If prices fall further, can you buy more and get an even better deal? If you use our process and you know how to calculate things using our real estate calculator, you will be able to understand what you're buying and why you're buying it. And you can write it out for the long haul. It's about adding these things to your diversification. If you love your personal residence and you're going to be there for a while, don't care where prices are going to go today or tomorrow. What matters is you enjoy your house, you live in it for a long time, and someday either you pay it off, you refinance it, it's probably going to be worth a lot more than you paid for it today because inflation is what drives housing prices. It's not just supply and demand. The example I always give is Youngstown, Ohio, since 1980 has lost 18% of its population. And the average rent in Youngstown, Ohio has gone up 4.4% a year. Dallas, Texas, they've increased their population by 3x, 200%, 3 times more. And their average rent increase was 4.79%. Not much higher. Why? More is being built in Dallas than in Youngstown. In fact, in Youngstown, they're demolishing properties. It's supply and demand. Anybody who says it's just about who's moving these places, stay as far away from that as possible. Unfortunately, that's the vast majority of people. I'm here to teach you the absolute truth of it.